As you may know by now, the Bank of England increased interest rates today. Again, they now stand at 4.5%. It was the 12th consecutive increase made by the bank as it tries to curb inflation. Well, an interest rate rise is often bad news for those with a mortgage and actually for some who are renting. So what are your options? I'm joined by independent mortgage advisor Nicola McKenzie from Stafford and Worcestershire estate agent Matt Nichol. Good to see you both. Nicola, let's start with you first of all. I mean, this interest rate rise was widely predicted, wasn't it? But
it was.
In real terms, what impact is it going to have for those with mortgages?
Well, I think the good news is that the worst is behind us. We're not seeing anywhere near the chaos that we saw back in September 2022. But if you are a homeowner and you do have a mortgage, then the biggest impact is going to come for those that are on a variable rate, particularly if you are on a tracker rate product. Likely you will see your payments go up as a result of the announcement. But if you are on a fixed rate product, then nothing to worry about. But if you're coming to the end of that fixed rate product, then, you probably will see an increase to your payments.
So the banks don't necessarily have to pass on this increase, do they? That's the important thing to say.
No, that's absolutely correct. And I think it's also important to remember that swap rates, which is essentially what banks price their fixed rate products on, they have been increasing since the beginning of April. So, in other words, banks have already started to increase their rates. And again, they've already taken into account the announcement that happened today. So I don't think we will see many drastic rate rises moving forwards. And I think the dust is settling.
OK, well, that sounds pretty optimistic. But Matt, what about the state of the housing market at the moment? Give us a bit of a health check. Is it the same towns and cities as rural areas in the Midlands?
Yeah, I think what we're finding is it's still pretty strong. We're finding that a lot of buyers are out there. There's been an increase in the number of buyers registered since February this year. December, there was around 36 being registered. There's now 90 plus. So I think even with the interest rate rises every single month, it's actually not put anyone off. The good thing at the moment is there's quite a bit of stock coming to the market, and that, I think, is the thing that we didn't have over the last 2 years. So now there's some choice, which is good for buyers.
And we know that confidence plays a huge part in the housing market, doesn't it? Does that pin solely on interest rates, or things like even bank holidays, coronation, does that make a difference?
I think all of those can have a bit of a factor to it, but I think seeing the sold signs popping up around them, it gives people confidence that actually it's not as it could be reported in the press. Sometimes it's actually quite a strong market still to be buying in. And I think there's people out there that need a bigger house and want to downsize, so they continue with their moves.
And Nicola, just coming back to the interest rate rise and what that means for people and options. If people are thinking, I'm not really sure what I should be doing, yes. Perhaps if they are going to Matt and looking to move house or whatever, what can they do?
Well, I think if you are looking to move home, it's really important to get good, sound advice. So make sure that you are speaking to a good mortgage advisor that knows their stuff. If you're coming out of a mortgage deal, then again, make sure that you get in early, look at your options around 6 months before the fixed rate deal ends. If it's a fixed rate that you're in, don't leave it until the last minute. And again, just make sure that you're getting good, sound advice.
Now, here's a crystal ball question for you both. Matt, do you think we have seen the end of interest rate rises? And do you think this confidence in the housing market is now going to pick up once again?
We've been projecting that this was going to be the highest it was going to go to, 4.5%. So, yes, I'll stick to that I think this is the highest the Bank of England base rate is going to be. Confidence in the market, it's been there since really the turn of this year, I think. Towards the end of the last year, it wavered a little bit since September, but it feels like it's back. And as I said, the number of people registered is still very positive, so I think it will continue in a good fashion.
And advice to anyone who has to move, who needs to put their house on the market, would be what? What's your top tip?
Price it accurately. Don't be ambitious, because often you lose out in the long run. We've had people that have gone for a high price based on recommendations, sometimes from agents, but they live to regret it because they have to then chop their price back while everyone else is still rising theirs. So be very sensible at the beginning. Don't be too ambitious.
All right. And Nicola, the crystal ball question to you as well. End of interest rate rises, do you think? I won't hold you to it, don't worry.
Please don't. I hope so. I think we could possibly see another 0.25%. But yeah, I hope that this is the last of it, almost certainly another 0.25%, and then that hopefully will be it.
That will be it. OK, great to have the advice from both of you. Nicola, Matt, good to have you with us. Thank you.
Thank you.